Hi, I'm Bart Ketterling from Martin Ketterling & Associates. Thanks for joining us today. I want to share with you how incorporating your small business can help you succeed in today's economy. One of the most common questions I get is, which is better, an LLC or a corporation? And when you're in the tax world, every answer begins with, it depends. Or perhaps yes, no, and maybe. Each entity has its own unique benefits and challenges. Let's start with the LLC. An LLC is a chameleon. An LLC can be taxed as a sole proprietor, or if you buy a rental property in your LLC, it's going to end up on a Schedule E where your rental income goes. If you have two members in an LLC, you're going to file a partnership, whether it's a rental or a business. However, an LLC has the option to choose. It can be taxed as an S corporation or C corporation. A lot of flexibility with an LLC. It's one of the things that makes it a good choice. The other thing with an LLC is that there's no minutes required. With a corporation, you're required to do those annual minutes. With an LLC, you don't have to do minutes. In California, LLCs have a major disadvantage, and that's the LLC annual fee. Based on gross revenues. For example, if your gross revenues for your business are $1 million, but you also have $1 million of expenses, so that year you have zero profit, the LLC tax is assessed on the gross revenue of $1 million, and you're hit with an extra $6,000 tax because of the gross revenues. On the federal side, there is no extra LLC tax. However, you're taxed at 15.3% for self-employment tax, exactly the same as a sole proprietor or a partnership. Let's look at a C corporation. C corporation is double taxed. Most of the small businesses do not want to file as a C corporation. Large companies like General Motors or Amgen or any of the big companies have to file as a C corporation. They don't have a choice. There's too many shareholders and they're required to file as a C corp. They get hit with a double tax. On the corporate level, it's up to 35% federal tax. In California, it's 8.84% California tax. So right off the bat, you're at 30 or 40% corporate tax rate. Then, when the dividends are distributed to the shareholders pay tax at their own rate, which could be another 20 or 30% on top of that. So as much as possible, you don't want to be a C corp. However, there's great fringe benefits are top-notch in a C corp, and there might be some reasons why you want to do that. In general, an S corporation is the best way to go. There's only one level of taxation. There is no federal tax on your S corporation. If you're in California, there's a 1.5% California tax on corporate profits, so it's minimum $800 and with a 1.5% California tax. So lots of good reasons to have a C corporation or an LLC or partnership, but in general, most small businesses should operate as an S corporation. So the other option is to file as an LLC, and then you file a Form 2553, and you elect to be taxed as an S corporation. You kind of have the best of both worlds. You don't have to do the corporate minutes, and you get the best tax structure. However, as the disclaimer says, consult your attorney to look at the liability protection afforded by an LLC versus a corporation. Now, as far as choosing the entity, if you're a single owner or husband and wife, it's pretty easy to dial in on which corporate structure to use. It gets a lot more difficult if you have multiple partners, if you have somebody putting up the money, somebody else doing the work, you have a foreign partner or foreign shareholder. Becomes a lot more complicated to select the right business entity, and you really need to get some professional help if you have that sort of complicated scenario.